Welcome, and I want to thank our distinguished panelists who are going to introduce themselves really shortly. But this session has a different topic than any topic we've had this morning, and that is the topic of digital capabilities at the top. Now, we've seen from sessions all day that companies, especially the incumbents in an industry, have to revamp themselves in terms of their capabilities and their skill sets in a digital technology age. And the incumbents, especially in major industries like automotive, where key success factors were traditionally what we would call physical assets, like manufacturing economies of scale, strong brand names, large dealer distribution networks, and product design, now have to gear up with capabilities that are quite outside of their skill set. Things like how to sense and manage data, how to develop artificial intelligence so that the car can sense its environment and know how to navigate, and how to interface with customers, a relationship that automotive providers have traditionally not held, is a direct relationship with their customers. This shift in capabilities is a major task that management faces, but also the board of public companies and private companies have to deal with. And this is the topic that we're dealing with in this session, is how do we make sure that we have the capabilities in the organization? So let me have each of our panelists give a brief introduction. Kathy?
Okay, I'm Kathy Misunas. Good afternoon. Hope everybody's doing okay. My background is actually in technology. Similar to Susan this morning, I was CIO at an airline and was CEO of the Sabre business, for those of you who know the computer reservation system and Travelocity and so on. So I spent a lot of my career in the travel industry, but on the technology and marketing distribution side. Since then, I have been involved in both small companies and startups and so on, and now I do a pretty big amount of advisory work. So it could be in travel and tourism, it could be in any industry, but a lot of my time is also spent as a board director, and that's really what I'm going to represent today, a little bit more of what happens in the boardroom as opposed to in the C-suite and what the relationship of those two things are. So I look forward to having the exchange with everybody.
Dean?
Yes, my name is Dean Yost, and I'm currently on the board of a major bank as well as an insurance company, and I'm on the advisory board of America Honda Finance Corporation, which is a captive finance company. Being a board member is not being part of management, and that is we're tasked with the responsibility to provide oversight, not management, and sometimes that's a very difficult line to balance. As a result, the responsibility of the board is really to participate in the strategy, to critique, and to provide a creditable challenge to management, but the board doesn't develop the strategy of the company. Again, we provide oversight. So I've learned through my journey in the boardroom that it's the ability to ask questions at the appropriate time where the value really comes in terms of being a board member. It's not pontificating about my 32 years of experience with PricewaterhouseCoopers. It's really the ability to ask questions and to have management think and hopefully probe some answers as to what the answers, the response to those questions could be.
And Sue?
Great. Hi. My name is Sue Swenson, and I spent my years in my career working in telecom, both fixed and wireless telecom, software, and digital content. So I've had a varied experience. I've tried to retire twice. I'm hoping I don't try it 3 times. I'm on the board of Harmonic, which is a video and processing. I call it Intel Inside. You probably know it. It's in San Jose. But I'm on the board of something that you've probably never heard of. I'm going to ask you a question. How many of you have heard of the First Responder Network Authority? Okay, great. It's great to have a couple of hands up in the audience. So I'm going to say a few things about that because it's going to affect all of you in this room and your family and friends. And you probably remember 9/11 in 2001, and you probably recall a report that Congress did that said that we need to fix the issue of our first responders not being able to communicate with one another. It took Congress 11 years to pass legislation, so in 2012, I guess that's fast for them. So in 2012, legislation was passed and we created the First Responder Network Authority. We have since issued an RFP, sustained a protest, issued an award to a partner, and the good news, in December of last year, our partner AT&T actually made their 120 megahertz available to all the first responders in the nation. What that means is that they now have voice and data capability. I don't know if you know, but they actually use a system called land mobile radio, which allows firefighters to talk to firefighters, police to talk to police, and EMT to talk to EMT. That's a problem. And so this actually solves that. And I have to tell you, it's an honor and a privilege to be part of something like that. So I just had to get that little commercial in there.
Okay.
Because it allows me to contribute all my years of experience to something, and we talked about it, Vijay, you said it this morning, with a purpose. So I'm delighted to talk about what happens in the boardroom and how we make sure that the right people are in the boardroom to advance the technology.
Can I ask a question before we start? I want to take a poll of the audience here. How many in the audience are or have been board directors? All right, so we're going to have to be careful here. How many have been CEOs?
Quite a few.
Okay, all right. How many IT professionals? Woohoo! All right, there you go. And students, academics? Let's see. All right. Okay, thanks.
Okay, great. The first question I'm going to ask is for Sue. In May of 2017, Ford CEO Mark Fields was fired because he had no plan for navigating what is often called Auto 2.0. Ford Executive Chairman Bill Ford said he felt the current climate of the auto industry required a visionary leader with experience executing a corporate paradigm shift. How do you make sure, as a board member, that you have the right top management team in place?
I think that's a great question. I'm actually going through that situation myself right now, and I think it's really being close enough to the team to understand what their thinking process is. Being involved in strategy meetings, not developing the strategy, but hearing the thinking and the thought process of management. You have to be engaged with the senior leadership and be exposed to them so that you can make a decision amongst yourself and the rest of the board as to whether or not this person has the strategic capability to take the company forward. And I think that kind of engagement really allows you to make that determination firsthand and not through somebody else. So I've seen that work pretty well. You got to stay close to the team.
Dean, given the capital market pressures for quarterly earnings and the fact that in recent years, activist hedge funds have placed even greater pressures on companies' financial performance, how does the board make sure that management prioritizes digital and provides adequate funding?
Well, that's a good question, and one that we struggle with on a regular basis in the boardroom. The National Association for Corporate Directors came out with a survey recently that suggested that 90% of board members feel that they lack sufficient IT or digital expertise. So with that as a background, it's really important to really understand the business strategy, the IT strategy, which in today's world, it's interlinked. Wasn't so long ago where in the boardroom we'd actually have a separate discussion, oddly enough, about the IT or digital strategy, and then later on we talk about the business strategy. That's no longer the case. They're embedded, they're aligned, and they're really one. I think best practices in the boardroom probably suggest that given the deficiencies, if you will, of expertise in the boardroom on some of these matters, it's important to get third-party expertise, consulting directly with the board. Outside input. You don't want to be so insular that you only listen to management, you don't have a different perspective of the world. And there's a lot of benchmarking information that is available in the marketplace where boards can benchmark themselves and the company against what the competition is doing. So I think, Margarethe, it's probably a combination answer of all of those. It's a bit of a kaleidoscope, but it is a challenging issue for boards.
And just for the other panel members, how does a company that is an old line company, like in banks, for instance, the old line banks, how do you manage when the market doesn't value these investments necessarily and sees them as inappropriate expenditures? Because tech companies have a past. They can spend millions and billions of dollars making acquisitions and investments, show very little in terms of earnings, and yet it's expected that they're making the right investments. Whereas incumbents don't get that pass, right? They're held to a different standard in terms of earnings and performance.
Let me suggest this. Being on a substantial insurance company board and one of the top 12 banks in the country, sometimes I feel like the transformation that the boards are confronted with is making Clydesdale, or making horses out of Clydesdales, given the pace of those industries. I find that it's extremely useful when we go through the budgeting process, that when we analyze the information technology budget or the digital budget, that's viewed as an opportunity to look at capabilities rather than a method of arithmetic. Because the discussions that go around the budget preparation are absolutely critical. They always start with a wish list as to what management would like to spend, and then you work that down quickly as to what you have the capacity to spend. But the key issue really becomes, what is that allocation of spend? Is it on new technologies? Is it on updating or remodeling legacy systems? Or, as mentioned this morning, is it on data and data integrity? So I think, at least from my perspective, it really starts with a real analysis and digesting what the IT budget and that process is.
You know, I just read an article about this, about companies that made too big of an investment. And I think that, you know, you obviously have to run your legacy business, and you have to have that be successful. But I think to the degree that you're committed to the strategy, as Dean says, and have a clear strategy, I think a carve-off of an investment fund for these types of activities and really targeted and staying close to that, seeing the success. I think somebody said this morning, it's focusing on the customer. What does the market need and what do the customers need? And you just have to have the discipline, but I think some companies has found that they got so zealous about it and saw stars in their eyes that maybe that investment was too big, and that's what put the pressure on the rest of the business. So I think there's a balance between the two, but I think there's always room for that if the board sees that within their strategy.
Well, and I think actually the investment world is changing in this regard, quite truthfully. And I think some of it is associated with all the transparency that's now required. It's changed very much over the past 7 to 10 years. And I think any company that doesn't take the opportunity to talk about their IT capability, and whether that's associated with the enterprise, meaning the tools that they use to keep the business running and provide to the employees, versus what they're spending on product and that customer-facing aspect of what they do. You have the opportunity now in your quarterly calls, your annual reports. You have so many opportunities to talk about why your spend is what your spend is. And companies that aren't doing that are doing themselves a disfavor.
It's a great answer. So Kathy, your background, as you highlighted, is very much in the technology space. So how do you make sure as a board member that technology issues and their associated risk, as well as the opportunities, has the attention of management?
I don't think there's a deficit as far as having the attention of management. I think it's a deficit of having the attention in the boardroom. And I don't say that critically in that, the board agenda these days, just based on what I just talked about, regulation and transparency, and you heard in one of the previous sessions that, the CEO and CFO have to sign off, that everything in their 10Ks and 10Qs and so on, is valid down to each word definition and so on. I think there's so much work going on in the boardroom and the committees today that getting technology, on the agenda is what fellow directors need to do. You need to talk with the chairman. If the chairman and the CEO are the same person, sometimes it's easier because the CEO knows the importance of it. But there has to be a concerted effort, on the part of the directors to make sure that it's on the agenda, that everybody knows what the important questions are associated with risks and asset utilization and so on. And generally, one director steps up. In my case, because I did have a bit of a technology background, I was able to make the point with my fellow directors. But on other boards that I've been on, it's been a little bit more difficult to get the directors interested, in seeing it on the agenda and spending time with it. So I think it's a little bit of having the courage of your convictions as a director to say, we have to do this, and we have responsibilities and real liabilities if we don't.
Right.
So Margarethe, there's 4 approaches for a board with let's call it an IT knowledge deficit that they could approach their oversight responsibilities. Probably the one most commonly used is recruiting a director with IT or digital experience.
Who then becomes the lone director, the Lone Ranger here. I've seen the movie.
The issue there is probably no one person can fill all of the gaps that are required. The second would be to designate a director or 2 as the person that champions IT issues at the committee or the board level. Third would be possibly bringing in an outside advisor to advise the board on technology matters. And then fourth, the formation of a technology committee. Over the last few years, I've spent a lot of time looking at technology committees, and it's interesting that Accenture's come out with a report that suggested that only 11% of global banks have technology committees. And more interesting, perhaps, is in all industries, KPMG suggests only 6% of companies have IT committees. So I think that's an evolution, and it's a journey. I guess my own view is, out of those 4 alternatives, it's probably a combination approach, and it depends upon the facts and circumstances.
And
No, I'm good.
And the pace of change has changed. Like what was acceptable 5 years ago is no longer acceptable in terms of how the boards have to think about digital. It's constantly moving faster as different industries are being impacted in the sense. Like in the case of Ford, the automotive evolution is occurring much more rapidly than a lot of incumbents even anticipated. And so now the skill set has to shift much more dramatically.
Well, and I think also, we're using the term digital and we're using the term technology.
Right.
And, there's a whole big mishmash of what people's understanding of those things are. So, bringing digital into the boardroom, because it's kind of, on the front page of the Wall Street Journal and so on, you can probably have that high-level strategic discussion as part of your strategy. But when you're talking about, technology, as I described it before, related to use, the enterprise tools and so on, that then becomes a yawner because, people really don't understand it. And people don't like to talk about what they don't understand, quite truthfully. I mean, it's kind of a human
Well, and if you think
situation.
about it, they're very far removed from the technical side. By the time you get to a board seat, you've been in an executive position, but you're no longer in the trenches of the technology. So,
And I would say, the questions that a director should be asking, and I think, you would both agree with this, for technology, are the same as you would ask associated with any risk or, asset associated question. You don't need to know the detailed answer of, how to make the watch if the director is, asking what time it is. You just need to look in the eyes of the people that are in the room and see that they understand what you're asking about. And if there's something that you need to follow up on or need to know in the future, then you go to the tools that you said. Bring somebody in. I mean, every board has the ability, to go outside and bring in extra consulting or talent or advisors, to help them through it.
great. So Dean, your background and board experience is predominantly in the financial sector. Is fintech an issue? And I'm assuming it is. How are financial institutions responding to this digital disruption? How do large companies that, how do you keep up? Like if you're a small financial institution relatively, how do you keep up with the larger companies that have the resources to make much more significant investments in technology?
Well, fintech is a major disruptor for financial institutions, particularly banks. And the future is not clear. But we got to put it in perspective. The budget, the information technology budget for J.P. Morgan is $9 billion annually. That's what we're up against. And with MUFG Union Bank, we're a top 12 bank. Our budget is 600 or 700 million, which is a significant number, but it pales in comparison to J.P. Morgan and the top 4 banks. It's a challenge, and it's a matter of balancing priorities. And again, what we try to do is be an efficient follower, try to be as opportunistic as we can relative to the, let's call it a limited budget that we have, certainly compared to J.P. Morgan, to ensure that we have third-party input, that we use benchmarking and peer analysis, keep close to the competition, and make investments in digital and technology on an opportunistic basis, so that we do have active programs in Silicon Valley where we've developed relationships with the current thinking. But I think there's a different approach depending upon the size of the institution, their overall direction, and frankly, the encumbrance of legacy systems. A lot of financial institutions, banks and insurance companies have old systems that they have to maintain, which still requires a substantial percentage of the overall budget spend.
So that doesn't paint a very rosy picture, in my opinion, right? Because if you just start to think about it, the investments in technology are really a scale advantage, right? So if you can afford it, you can have a scale advantage. So if everyone has to make the same investment, then whoever is the largest player can make the larger investment and get the larger reward. And so that scale effect in the financial institutions, do you think it will lead to an evolution that, do you see the industry and the financial sector changing as a result of technology? The number of players, the size of the players?
Well, I don't want to predict the M&A environment, but I would suggest that over the next 3 to 5 years, there's going to be a continuing emphasis on the importance of digital. And given the regulatory environment we have, a lot of financial institutions, a significant piece of the board time and the committee time is dealing with regulatory issues. Surprisingly enough, it's being dealt with quality of data issues. And for banks and insurance companies not to have quality of data, that is their business. But with these legacy systems, we have to continue to invest in data issues. And as mentioned this morning in some of the presentations, if you don't have good data, artificial intelligence and blockchain are highly dependent on quality of data. So, Margarethe, I'd like to be more positive than negative, but I think this is a journey that we're on.
Okay, no, I didn't mean to put that aside. So Sue, talking about these legacy systems that Dean was referring to, all companies have legacy systems, not just banks, and they face financial constraints in terms of investments. Yet they also face digital technology disruption. So how do you ensure, as a board member, that you're investing in new technologies? And how do you, as a board member, monitor what the organization is doing with regards to their digital strategy and whether or not they're actually staying ahead or keeping afloat, as we might say in the industry?
Yeah, the legacy systems are a reality. As you said, Dean, it's something that you have to deal with. But what I found, and I'm optimistic too, about the ability of an organization to decide what to prioritize. It's a matter of going back to, do you have a strategy? Are you going to set aside funds to do this? And are you going to set aside part of the organization to focus on it? Because there are a number of people in the organization who have to manage the legacy system. And that has to be done. But in order to really make progress in this area, I think you need to, one, make it part of your strategy, make it a priority, make sure the board actually has ongoing updates on it. And you just have to have the discipline to set aside those funds for those investments. And the money's going to be spent somewhere. And I think sometimes the board has to be a little bit more aggressive with management sometimes to designate and say, I want an investment portfolio on this. And just set aside the money, and when you go through the budgeting process, you create a baseline budget that sets that money aside. And there will be, I've seen a couple of companies where you set aside a portfolio, there's some specific projects that you start out with, but you also have some additional money, so as the market changes, not on an annual cycle, because markets don't change on an annual budget cycle, you need money on an ongoing basis. And I think, but I think in a company, in a large company that has done things a certain way for so much time, I do think you have to carve off an organization that focuses on this, because it won't get done. As we said before, these companies have quarterly earnings that they have to meet. The base business has to perform, and that's important. But this also needs to make progress. And this way, in a designated way, the board can stay close to those things and understand what the investments are being made in, how that's affecting the customer, because at the end of the day, it's either about making the company more efficient from a digital perspective or serving the customer more effectively. And so you stay close to those things, and it takes discipline. It's tougher in a legacy company than it is in a startup. I mean, it's just the way it is, but it can be done. I've seen it.
But I also think that there are some tools, especially available to the board, relative to compensation and benefits.
Correct.
Because money does change behavior, and if obviously you need to keep the legacy
Right.
systems going.
Right.
But whether you're setting up a little bit separate organization, to do the digital work or whatever, you have the ability, to compensate and
Sure.
incent people differently to get it done.
Motivate
So
them.
that's right.
Okay, so the last question I'm going to ask the panel is about cybersecurity. It's kind of a theme that's popped up on occasion during the sessions this morning and this afternoon, and it's going to be a topic later today as well. But cybersecurity risks are real. They're very major. They're board-level issues. And so, Kathy, given your kind of tech background, how do you, as a board member, know that the firm has an adequate policy to deal with cybersecurity risks?
Well,
What allows you to sleep at night on that issue?
on both the public boards that I'm on, we have created cybersecurity committees. The one is now in its 4th year, so we were way ahead of the curve on it. The other one is in its 2nd year. And clearly, just having committee focus and that relationship of the committee reporting back to the board and the board then being engaged with the conversation. Because, I mean, it is that looking in the eye of somebody and seeing, that they're following the plan that they came to the board with, that they're implementing the tools that they said that they were going to, whether it was software or whatever the scenario was, or hiring the outside people, or getting the right staffing, and recruitment. You can monitor, all those things. That it's not rocket science to do that, quite truthfully. So I think, in the cases that I've been involved in, I feel confident. I'm not losing sleep at night because that you're already hacked. I mean, the stuff is already in your system. There's nothing you can do about it. You've found everything you could. New ones happen every day. You get more of them every day. But you've done absolutely everything that you know how to do and hired the best people. And you keep on it every minute of every day.
It's a living reality.
It is a living reality, and if you're confident, in the people that have been hired in the business, then, and if not, get rid of them.
In this area, it's the board can get reasonably comfortable with the perimeter of the organization, but a lot of the discussion and the attention has to be on third-party risk management, and that is, it's not just protecting your
Absolutely.
perimeter. It's having some kind of protection around all of your vendors and the vendor's vendor. And that's where a lot of the cyber security discussions in the boardroom have evolved, given the fact that we are getting more comfortable. You never have 100% security, but it's third-party risk management that is a critical
So it has to
issue.
be built into your plan. I mean,
Yeah. Exactly.
We didn't have it in the first plan 4 years ago, but it's sure part of what
Yeah.
we do every day now.
Okay, great. So I'm going to open it up for questions from the audience. Again, would you state your name and your affiliation?
Right here.
Miles Sewer, CIO.com. One of the things in Jeffrey Moore's new book that he talks about is it's not about seeing the trends that's necessarily the problem in legacy organization. It's about picking the bets and putting the bucks behind it to win. that there's too much conflict that happened in legacy organization about which bet's going to win, which bet's not going to win. Is that what you see in the boardroom as well?
Actually, I haven't seen it in the boardrooms I've been in. I see, because of the fact that people were clear about the strategy and deciding what to put, again, coming from the customer perspective. So I haven't seen that conflict, but I think it takes a clear-cut strategy. If you don't have a strategy, I think you're going to have that problem.
Or you keep doing what you were doing before and then try to convince somebody you need to change your systems. The board's going to say, well, why?
Right. Right.
The one area that hasn't got sufficient focus on new technologies and digital, I think, is the fact that this all requires change management. And many institutions might be pretty good at putting in new technologies, trying to find the wave. But if the workforce is not educated and embracing what the changes are, it's doomed for failure. So I think certainly in a transformational IT project, for example, there has to be a heavy component of change management because it does require people to change what they do, how they do it, and in fact, it might even impact their jobs.
For sure.
Okay, we have time for one more question.
Thank you. Christine Chu from Cathay Bank. Hi, Kathy. As a board member, obviously cybersecurity is a huge factor in everything else that we review. How deep does your board panel get involved in incident management response plans and ensuring that your organization has one that's appropriate in your environment?
We actually spent a lot of time with a very specific section of our crisis communication plan. So we took that approach that we said, okay, we have a corporate crisis communication plan, but it really doesn't serve, first of all, our technology, but specifically our cyber needs. That this is a whole different animal that needs to be communicated, to the street, to consumers, even though that particular company isn't consumer direct. There are consumers at the other end of stolen, data, if that's what happens. Our employees, what happens, the communication to the board itself, how quickly it occurs. So we hired an outside company to come in and do a very, very specific cyber crisis plan.
Okay. All right. Well, I want to thank our distinguished panelists for being here and sharing their experiences.